With the help of this video, we can take on the income and balance sheet template. Taking a look at that now. Now once this is open, you're going to notice two tabs. The first tab on the bottom is for income statement. Basically how much money goes in and out during any given time. Probably you're going to track this monthly. The second tab is for balance sheet, which can give you a snapshot of the value of your company at any point in time. Now, returning to the income statement, let's begin to fill in the gray boxes. First, I input my business name and the fact that I'm going to be tracking this monthly. Period 1, therefore, just means the first month that I track. We'll fill in some sample numbers for gross revenues, also known as sales, and the costs of the materials we use in the business. Next, I'm going to start making a series of assumptions about the cost of running my business, and meanwhile, the spreadsheet will add and subtract my revenues and expenses. Bear with me a moment while I lightning quick fill in a whole bunch of assumed operating expenses. The difference between revenues and expenses, of course, we know as either income or loss. I picked revenues and expenses that show a positive number, income. For non-accountants, another word for income would be profit. Looking slightly further down on this clever spreadsheet, you notice there's another calculation which lops 25% off for estimated taxes. So you can get an after-tax net income number, which tells you how much you actually get to keep in your business at the end of the month. Moving along to the second tab, balance sheet, we can measure how much money is in our business. First, and obviously, we may have cash in the bank. Next, we can also count money we will collect from customers who've already bought our product. That's known as accounts receivable. Plus, in the same section, our inventory, stuff we may be ready to sell. In the next section down below that, we can count up all the physical things we own, such as land, furniture, and property improvements. And having done all that, we get a snapshot of all that we own through the business. The bottom half of this tab then allows us to total up what we owe through the business. Accounts payable, for example, refers to our bills that we owe in the next month. There's also space for any other bills we owe in the short run. If our time period is monthly, then we list the monthly amounts due here. Other current liabilities just asks us to list debts that we have to pay right now in this time period in this month. Non-current liabilities, with the smaller categories of notes payable bank, notes payable other, and here we just list the principal amounts, the total amounts due of any loans that the business has. The final section here, showing owner paid-in capital, would be the cash that you or your partners originally put into your business, as well as profits that were left in the business from a previous time period. This tab also brings in the current period's profits, which was tracked in the earlier tab. If the math of this tab is done correctly, the liabilities plus shareholders' equity will be the same amount as the total assets in the top half of this tab. Another way of saying that is that any amount of assets larger than liabilities will be mathematically counted as shareholders' equity.